Ladies and gentlemen, this is the sixth and the seventh class, or the seventh and the eighth class. Sorry, I got a little mixed up there. The first class that we're going to be doing here today will be on double top and double bottom divergence. And then we're going to have a little break, and then we're going to do the eighth class, which is the second class of today. We're going to be talking about hard to see divergence, which is also known as hidden divergence. So anyway, first I want to ask, can everybody hear me? I'm sure everybody can. This is a good, webinar thing that people can hear properly. Everybody can hear and see, right? Everybody's saying yes, yes, yes. Okay, that's what I want to see. Okay. Hi to everybody. Okay, it looks like we're all pretty much here for today. I'm just going to close this little screen here now. And basically, first what I'm going to do is go over some trade setups that we had this week. And then I'm going to get into teaching you about the double top and double bottom divergence. Okay, so anyway, as you can see here, this is the 4 hour, okay? There, it's highlighting for us. You can see it now. It says 4 hours. We're looking at the 4 hour here, and I'm going to show you the couple trades that we had today, and I hope some of you were able to spot some of these trades as well. The first one, okay, was basically to enter right here. We're talking about the trade line pullbacks right now, okay, the simple, easiest one, okay. So basically, we drew the line like that from the end of last week into the beginning of this week. We basically had three bearish candles. Like I told you before, we need 3 or more bearish candles, okay, to get in. So we had an entry to go long right in here. Okay, we knew that the trend changed here last week, near the end of the week. Okay, so we had our pullback and we had our entry. And for those of you who got in on that one, it would have been an entry at 29.47. Your stop would have been about 70 pips if you added on an extra 20 pips or so. And as you can see, all the way up, it went up about 190 pips. Not that you would have got 190 pips, but that was our one trade. Now, we also had some other pullbacks here, but it didn't give us 3 bearish candles here, did it? No, it didn't. And it didn't here as well, did it? No, it didn't. So these 2 areas where we had a pullback, okay, there was no other buy entries on our journey up this week on the euro. We only had the one entry, and it was near the beginning of the week. And then, as you guys know, okay, we look for natural market flow analysis, and when it changes, then we can only look for sell trades. So we had our floor right here, okay? We needed to break that floor. It basically broke it right here, but not by much, okay? So if we just extend that line out, okay, there. It closed below it by just like 1 pip or so, okay? And then it did its first pullback, which created, here's the first low, okay, and then the lower high, right? So we knew it changed direction here. So it broke through the floor, so we had another trade set up to go short. Okay, so right here, as I told you, we need 3 or more bullish candles. Now that we're looking to sell, we had the 3 or more bearish candles over here to buy. Okay, so because this one had a long wick on it, okay, it's like a pin bar to go up, you would have put your order to sell 1 pip below the wick of this pin bar. Okay, even though it looks like a pin bar that would go up, okay, there's a lot of traders who said, oh, look at this, almost like a double bottom, and we got a pin bar, and they probably bought up here thinking it was going to go higher, and guess what happened? Well, they got knocked out of that trade. Okay, but we weren't trading pin bars, okay? We're trading 3 or more bullish candles pullback. So you would have got short right here, okay? Your stop would have been up here, about 70 pips. You probably would have put it right to the top here. And it went 62 pips in your favor, okay? So those were the two trade line pullback trades that we had. We had a bullish one and a bearish one, okay? On the 4 hour. Now just let me remove that. Now I just want to show you with the Fibonacci, okay, we had our first, you would have first drew it from here and here. This one didn't work out. And then when we drew it from here to here, okay, this one didn't work out either. I'll even show you, okay. You put it there. It came all the way down and blew right through our, our area to buy. So we needed it to stop at most at the 61.8 level, which it didn't. It kept on going through. So there was no qualifying trade in here. Okay, so I'll remove that. And then, this bullish candle here sort of changed the trend again. So we again would take it right from the low to this high right here. Okay, nope, doesn't want to go there. Hold on. Okay, so as you can see, it came down to the 50, right? So right on this bullish, if you would have had your order to go long at the 38.2, you would have suffered a little bit of drawdown. If you would have had your order to go long, a limit order to go long at the 50% right there, you would have suffered a little bit, but then it went up and hit your target, okay? But that's what we call the aggressive entry, okay? But if you did a conservative entry, you would have waited for a candle formation to tell you, okay, we're done going down now. Maybe it's possible we're going to go up and hit our target. So this second double dip here off the 50 created kind of like a hammer. It kind of looks like a bullish hammer, pin bar, whatever you want to call it. It gave us our formation to say, hey, let's get long. So right on the opening of this candle, you would have got long, okay, right there, which was 29.53. Your stop would have been either right below here or below the low, wherever you would have put it, okay? And it went to your first target of 25 pips, and it went to your second target of 51 pips, okay? So that was that. That was our only Fibonacci trade pullback setup that we had this week. Bullish, that is. Okay, let's go and see if we have any bearish ones. Hold on. So we didn't have another one up here because I don't think it pulled back enough, but let's take a look anyway. If we took it from this new low to this high, okay, well, it almost went to the 38.2. I guess if you did get in on this one, you could have also got in on this one as well. You would have got in on this candle, and it went up about 50 pips. But I don't like to enter on any trades above this 23.6. You want to enter, ideally, minimum at the 38.8, 38.2. So it didn't give us that chance to enter down here. So I wouldn't have done this one. I would have passed on it. But anyway, that was the only other trade. If you would have done it, you would have got in on the Fibonacci. Okay, so now that we learned that the trend changed here, so we would have took our Fibonacci from the top, put it to the low. See, it went right up to the 0.82. So that doesn't qualify for a trade because it went past our levels, our three important levels, which is the 38, the 50, and the 61. Okay? So there was no trade set up there. Okay? So then if we take it down to this low, and we move our thing up here from this to this high, okay? See, again, right here. This does not qualify to short because it needs to go minimum to the 38.2 before we look for a trade. It did not go there, so there was no trade. Okay, so there was no selling trades using the Fibonacci tool this week. Okay, let's quickly see how many people we have in here now. Okay, we got about 40. That's great. Okay. What's this? Will you give us instructions on how to attach the OSMA? That's in the video, Kanoda, about the platforms. If you go in the members area, you will find that. And this guy's asking, Zoran's asking, why do you take the first one? Because of the trend change down? Are you talking about the Fibonacci, Zoran? Trade line pullback. Yeah. Yeah, you take the first one, yeah. The first, believe it or not, okay, let me close this here for a second. When we have a trend change, okay, your most powerful trade will always be the first setup. The second one can get a little bit more risky. The third one, if there's a third one, can get even more risky yet. And the reason why is because we don't know when the trend's going to change again. So it's ideal that your first, pullback right here from when the trend changed is your ideal entry. Okay? Just like over here, when the trend changed over here, we didn't get a trade here, but we got one here. So this was our most powerful one, as you can see, and it took off up. Because you never know when it's going to change trend. So anyway, that pretty much covers the Forex Trendmaster entries this week. Just wanted to go over that with you guys. There was one divergence trade. It wasn't the best trade, though, and you can see I already have it marked on the chart. We have a high and a higher high, and we have a high but a lower high. Very, very, minute. It's very minor. But anyway, if you would have gotten this trade, okay, you probably would have drawn, this would be our major trend line, okay, right there. And this here would have been our minor trend line. Come on, hook on there. Oh, it doesn't want to hook on there. There, like that. Okay, so once you got a bar, when this set up right here, it gave you basically 4, 8, 12 hours, and then with this candle, 16 hours. It gave you warning to get short. Okay, so you would have got short on the opening of this candle right here. Okay, and that's like 20, 50 pip stop. It would have not given that to you right away. It would have came back up and scared you a little bit. Always does that. Then it would have came down and gave you your 60 pips. And it came down the most about 100. Okay? So that is your easy to see divergence trade setup on the 4 hour. Let's see if we have any questions about that now. And then I'm going to quickly go over the 15-minute time frame. And then we're going to start learning about double top and double bottom divergence. Okay? I just wanted to go over this for, excuse me, hold on a sec. Oh, when that dry spot catches you in the throat, holy jeez. So I just wanted to go over the charts with you first. You did have a hidden divergence to buy. Well, I haven't taught hidden divergence yet, Dave. So guess what? I'm not going to talk about it now until I teach you. So anyway, we're only this week. All that we're looking at, Dave, is the trade line pullback, the Fibonacci pullback method, which is Forex Trendmaster, and easy to see divergence. Okay, which is a high and a higher high, or and a low and a lower low. Those two different kinds, of divergence. The one kind of divergence, bearish and bullish. Easy to see, as I call it. It's called regular divergence by most. Yes, a lower high, yes. Yes, you got a high and a higher high in the chart, and you have, a high but with a lower high on the indicator. Yes, exactly, Gerald. Okay, so now that I'm going to move the screen here now, we don't have any questions. Okay, so as I showed you here, this is the 4-hour chart, okay? So that is the only trade that we basically had, okay? So just let me remove these lines. One sec here. Come on, cooperate. No, I don't want to remove the asthma. There we go. Okay, so that is the 4-hour chart. We had a couple nice trades here again. Actually, I just want to ask here quickly. Did anybody do any of these trades that I just pointed out? Did any of you people see these trades this week? Say yes, no, maybe. Wasn't looking. Hope you were looking for them. Doug, you seen them. John seen them. No, yes. Did any of you make any pips this week? Doing them? Too busy working. John did, yes. Yes, good. Well, at least a few of you. Yeah, even on demo, like just practicing now. Yeah, even on demo is fine. That's what I really want to stress to you as well is you want to. Hold on a sec. Gotta get another drink. You want to practice this on demo until you get it down, and once you get it down, then you can go live and the way you go. Okay, great. Okay, so I'm going to show you quickly now in the 15-minute a few of the setups, and then we're going to get on to the double top and double bottom divergence. Here we go. Okay, so I'm going to shrink the chart here one size so I can see it and spot it easier. Okay, here we are. Okay, so as you can see, I already have this laid out here. I'm going to scroll back. As you can see, these are pretty cool, the Fibonacci pivots. Okay, here's our pivots. It shows our S1, S2, S3, R1, R2, R3, okay, and the pivot. And the only other indicator I have on here basically is this whole numbers indicator, that shows in between and the whole numbers. And the spread and the current price at a bigger price. Okay, so let's move back here to the beginning of the week, which was right here, okay? So, over here, basically, this here was double bottom divergence, okay? But that's not what we're looking for. What we're looking for this week, okay, was easy to see divergence. So, when the market was coming up, right, what were we looking for? We were waiting for it to put in a high, retrace, right? And as it retraced, we were waiting for a higher high to be put in. So this was the deal right there, okay? And on the indicator, we're looking for a high, but a lower high when it made a higher high on the indicator. So if you would have drawn a trend line on this sucker, I would have drawn it from here, okay? Because if you drew it from, this was too steep of a climb to draw one, so I would have drawn it from the first level that it did a little retracement, and as you can see, right in there like that, that would be a good break. When a good break of this happens, you could get short. So on this particular trade, you would have got short, you would have had like 20 pip stop, okay? And it went down about 34 pips. So it was a nice winner, okay? That was the one trade we had this week. And then, as we ventured on and climbed up, see, we had a high here. So when the market was going up again, it changed trend. We were looking for a high and a higher high. Well, we had a high here and then a higher high. But, see, the indicator did not match up with it now, did it? No, it didn't. it was a higher high in the indicator, so there was no divergence to sell. Okay? There's actually hidden divergence in here, hard to see as I call it, but we're not talking about that yet. We will be in the next class. Okay? So then, at the end of the day here, again, okay, it happened where we put in a high, it retraced, and then a higher high. So we did have divergence here, but I wouldn't be trading at this time. This is the beginning of the Asian market where it's going nowhere, but there was indeed, in fact, divergence, okay? Because we had a high and then a higher high, and then we had a high and a lower high in the indicator. But as you can see, it didn't go anywhere, and then it went higher, okay? Now, this one here is kind of tricky, okay? It's like a grinding up slowly kind of mess that wasn't going anywhere. So if you drew a trend line on here, okay, this is how you'd probably have to draw it, like this, okay? So we did have, you know, a high, then a higher high, then a higher high yet, then a higher high yet. So if you take it from here, okay, like that, and then you line it up from down here to down like that, that was your high, higher high, okay, like that, and your lower high on the indicator right there. So, again, if you would have got short on this, okay, you would have got short right here on the opening of this candle. Your stop would have been about 25, 30 pips. And if you were to drag it on out through, okay, it definitely gave you the 20 to 25 pips. It went down about 29 pips. You would have got your 1-to-1. But it would have took a very long time for it to happen, okay? So, me, I day trade some of the times, you know, with this, but if you really want to stay away from the noise, like I told you, you really want to look at 4-hour charts and daily charts, okay? So, here it is again, okay? Market came down, put in a low, then a lower low. So, let's see if we have it here. I believe we do. Okay, but it wasn't by much if we do. I don't think we do. See, there's times where, yeah, see, oh, wait a minute. No, I'm drawing that to the wrong spot. Okay, I think that's the spot. Oh, actually, it's right there. Yeah, so indeed, this was divergence, okay? Even though it didn't really kind of look like it, it's just, but it was. And even though it kind of didn't go anywhere, okay, see how it went into the red zone here. And anyway, but there was divergence here. If you would have got in this one, you know, it's kind of hard because it came down so quick, so steeply and quickly. You would have had to look somewhere in here to get in. So you'd have waited for a bullish candle, okay, and it was right near this 131 whole number, which is kind of tricky also, okay, when you're doing small day trading. But if you would have got in here, you would have suffered about 10 pips. Your stop would have been, you know, about 20, 25 pips, and it definitely went up 31 pips. You would have got your money out of that one. Now, see up here where we have from this previous high to this high, we now have a high and a higher high, don't we? But look at the indicator. It doesn't match up. If it does, it's very minute. Let's see. So if we line it up, let's see. Let's line this up from here, yeah, to those two. So let's see. The value is 222. What's the value of this one? See, 3335. So it is indeed. Watch. Okay. I'm going to stretch this out to show you that when it's very close like this, this is how you can see if it's divergent. See? It is. It's going down on an angle, and we already took the measurement from the indicator. Oh, now it's giving a different one. Now it's 331. Now, what's it giving? 294. Oh, it's giving different readings. But anyway, it is divergent, but just by a tad, okay? Not by much. So you would have got, just like this, you would have got in your trade somewhere after it broke You know, I would have took a trend line like this, put it in like that. So I would have gotten this one short right in here. Okay, so you would have had 20, 30 pip stop. Would have went against you about 8 pips. And there's your basically your 30 pips there. If you didn't get it there, it would have went down and onto there. There's also some hard to see divergence in here as well. But I'll be showing you that later. Okay. So anyway, there's that trade. Now, here's a low and a lower low. Okay, but definitely not divergent. This needs to be up here, not down here. Okay. Then, okay, so here is the end of this week, which is Friday. Basically, I don't see no. Oh, actually, there is divergence here. Okay, let me show it to you. Sorry. And here it is, right here. We have a low, and a lower low, and then lower low, and then tiny little lower lower low, lower lower low, ho 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 ho. Okay, it's Christmas here now. No, just joking. Okay, so anyway, just like that. Right here from this one. See? There it is. We'll line that up with the crosshair right there. Oh, actually, it's from right there, but it's still divergent. Okay. So anyway, now this one, okay, you'd have drawn your trend line right from up here. See this beautiful trend line here, right here. Here and here, it bounced off of it, okay? So this candle right here is what told us, okay, let's get long. So if we got long, okay, plus 10 pips, let's say. Okay, that was what was that? 14, okay, so we'll say 20, 25. If you were to put your stop there, see, it only went up 17 pips, okay? So you either would have lost on this one or you would have moved your stop to break even depending on how you want to trade. Okay, but anyway, that's what happened on that last trade. Okay, so anyway, that's all the trades on the 15-minute, okay, that I'm going to cover with you guys, which were easy to see divergence, okay? Now I'm going to ask, does anybody have any questions about this? Doug says, you have the template set up to only show them on lower time frame. I wonder where they went. I don't know what you mean by that. Yes. How do you find the target? Well, whatever your stop is, that's how you find the target. If your stop was 20 pips, then your target's 20 pips, Philip. I've already talked about that numerous times in the other videos. If maybe this is your first time here, I don't know, but you need to go and yeah, you need to go watch the videos. But also Doug saying, then support and resistance levels. Yeah, you can use support and resistance levels as well as a target. Like I showed in the other video, how to draw support and resistance. Is there any other questions on these trades, people, folks? Did anybody do any of these trades on the 15-minute, or were you just concentrating on the 4-hour? Oh, nobody's saying anything. Okay. Anyway, 4-hour only. Yeah, okay. Well, that's good. Okay. You really want to stick with the 4-hour. Yeah. The indicator for the fib levels. Elvin, I don't know what you mean. The Fibonacci tool from up here, you mean? If you go and watch the other videos, Elvin, you will find the video that tells you exactly how to set up the Fibonacci tool. Okay? Just the 1 hour and 4 hour. Hey, Nancy. Yeah. Let me quickly show you on the 1 hour too. There were some nice trades. Let me go there quickly, and then we'll start in with the double top and double bottom divergence. Okay, let's see here. Templates, and then it was called Triple D White. Okay, so let's go to the 1 hour. I'm sure there was a few trades here. Oh, maybe not. No, there should be some. Okay, I think there should be some that we got faked out on. Okay, so anyway, here's the beginning of the week here. There was no trade to buy down here. Not easy to see divergence, that is. Okay, and then as the market came up, look at this. Okay, here's a bad trade, ladies and gentlemen. Thanks, Nancy, for saying you're looking at the 1 hour. Okay, right here. Okay, you have a high, it retraced, and then it put in a higher high. Okay, now look on the indicator. We got a high and a lower high, right? Indeed, we do. That is divergence. So we would have drawn our trend line probably right from this low. Like if you drew it from here, that would draw the trend line way out like that. But if we drew a minor trend line from here all the way up like this, okay, it would have gotten you short right here, okay? And your stop would have been about 50 pips. Let's see, it was 35. If you do on the hourly 20 pips past above, so that would be 35, 45, 55. 31, 42. What's the high on this candle? Oh, look at that. It would have missed your stop by 3 pips. Holy jeez Louise. Oh, man. If you would have put the 20 pip stop there. Okay? So it would have just missed your stop, and then it would have slowly came down. If you got short there and you had, what, a 55, I said, right? Yes. So 55 pips. You got it right way over here. You would have been in this trade for about 3 days. Okay, so anyway, that's the only easy to see divergence trade that we had on the 1 hour. Okay, so anyway, I covered all that. Now let's learn about double top and double bottom divergence, which is pretty easy. I know a lot of you will say, oh, it's rare when you see double tops and double bottoms, but believe it or not, they happen. Once you start to look for them, okay, they happen a lot more than you would ever imagine, okay? So anyway, let's go find some. So let's start on the 4 hour, okay? Maybe I won't be able to find any on the 4 hour. I might have to go on a smaller time frame too to find some, but wait and see. Okay, so let's look back in time, okay? Actually, here's one right here, okay? But let's find another one. Let's find a bullish one. Okay, right here. Let's have some green lines on here from before. We'll remove them. Okay. So anyway, when the market is going down, okay. So we know by our natural market flow analysis when the trend changes. Okay, so when the market is going down, okay, last week I taught you that when the market's going down, you're waiting for the market to put in a low, right? And then the market's going to retrace back up, okay? But then you're looking for another lower low, right? So it's basically the same mental thinking when looking for double top and double bottom divergence, except this time you're not looking for a lower low to be put in, you're looking for a double bottom to be put in, okay? So in this particular case right here, okay, we changed trend, I believe it was somewhere, it was probably right here, okay? So it was going down, okay? We're looking for a double bottom, okay? So in here, we put in a low and a lower low. But if you disregard this wick and you go like this, okay, basically, now what I want to teach you here and tell you here is that they don't have to be perfect. Like, it doesn't have to be pip for pip, a double top, or pip for pip, a double bottom, okay? It can be out by, like if you're on a 15-minute time frame, it can be a little bit higher or lower by 3 to 5 pips. If you're on a 4-hour, that could be extended to, say, 10 or 15 pips. If you're on a daily, that could be extended from 20 to 40 pips, if you follow what I mean. And what I mean by that is, the one side of it could be lower by, 5 to 10 pips or so. So anyway, right here, okay, to right here is basically a double bottom. Even though you have all these candles in between, but when it first, put in this low here, and then retrace back up, that's what you're waiting for, and you're waiting to, when's it going to produce this double bottom? And, they kept buying off these lows right here. So it created this double bottom, okay, like this, even though it's not perfect. See, every time it wants to go and find the next candle. But anyway, that's basically a double bottom, okay? And I'll put another one. Here's another one here. Here's a perfect double top, basically, right there. Okay? So put in the high, came down, went up. Did not put in a higher high, put in a double top. It missed it by about a pip or two. Okay? And over here, I know I'm showing you two of them at the same time. I don't mean to confuse you, but I just spotted that one as well. Okay? And the same with over here. Okay? Which is here to here. Okay? So, like I was telling you, and I got to continue what I was saying. So the same thing when you're looking for easy to see divergence, it's the same thinking. When the market's going down, you're going to be, now that I'm teaching you this next entry of divergence, you need to be thinking two things, okay? You got to be thinking either it's going to make a low, then a retracement, then a lower low, which will give us easy to see divergence, or it's going to be making a low, then a double bottom within a few pips, then that's double bottom or double top divergence, what you're going to be looking for. Okay, so you're going to be thinking two things now when the market is coming down. Okay, and when I teach you the hard to see divergence in the next class, I'm going to teach you another thing that you're going to be thinking about. So there's going to be three things to think about. But, okay, even though there's three things to think about, first, I want you to master one thing at a time. So don't worry, you can always come back in the members area and watch the next thing and then watch the next thing and master each one by one. Okay? So what I'd really like for you guys to do is spend about a month, okay, looking at charts, looking for easy to see divergence. That is the high and the higher high when it's going up, and the low and the lower low when it's going down. Okay? And then once you think you've found that and you can easily spot it and you've mastered it, then you can move on to the double top and double bottom divergence. And then once you master that after a month or so, it might not even take a month or so because you'll be so used to spotting the easy to see divergence by then that it'll probably just come to you very easily. It's the final part of this that's really going to take some time. It's taken me like 5-6 months, okay, of constantly staring at charts to find it and see it, okay? But believe me, once you spot it and see all three divergences, it's going to be so worth it to you because you're going to be able to see it in a heartbeat and trade it and make money. And that's what this is all about, okay? So anyway, that's what I wanted to say to you guys about that. Okay, let me just remove that line. So right here, let's start over here. Okay, so right here, the market was going up. So we're thinking, okay, we want to sell, right? Yes, indeed. Sell, sell, sell when the market's going down, when the market's going up. So now you're thinking of two things. You're thinking of either it's going to put in a high, a retracement, then a higher high. That would be easy to see divergence. And the indicator will be a high with a lower high. In this particular case, it didn't make a higher high. Instead, it made a perfect double top. Okay? So you would have sold it right from the break of this. Now let me draw the trend line. Okay, so you would have drew. Oh, come on. Okay. I would have drawn it from right there like that. Excuse me. Oh, I gotta do a water run. Hold on, I ran out of water. Sorry, ladies and gents. It's like I tell you, it's cold and dry here in Canada. Oh, jeez. Excuse me. Okay, back to this now. Alrighty then, as Jim Carrey would say. Okay, so we would have got short right here, okay? You would have done 44 pips, so 64, up to a 64 pips, 65 pips stop, and it didn't take long to go there, okay? You would have got your 2 to 1 on that, no problemo, okay? So anyway, that's where you would have got in on this double top divergence. Then, when the trend changed, here, let me blow this up. Then, when the trend changed and took out this floor right here, right here, it changed. So it told us, it said, oh, we're now in a bearish trend, okay? If you miss this trade up here, and say you got to the market right here, you're going, okay, trend was changed here. I'm looking to buy this sucker, okay? But anyway, as you can see right here, here's one of our trade line pullbacks. See how many nice, beautiful trades we can keep finding here. You would have sold it right in there. Boom, beautiful trade. Anyway, we're not talking about that now, Jason. Okay, so anyway, the market's coming down. It put in a low. So you're thinking in your mind, okay, now I'm waiting for it to retrace. Now I'm waiting for it to do, a lower low or a double bottom. So basically, within a few pips, okay, this is a double bottom, okay? It's like off by about 7 pips. So it's not perfect like this one over here, okay? But it's good enough. So you would have drawn a trend line, okay, like this, and you would have entered somewhere in here. You would have got long. So you would have got long somewhere in there. Your stop would have been, about 75 pips. No, you didn't get 75 pips out of this one. Well, you did. Well, oh yeah, you did up to here. You got 81 on this one. Okay, so there you go. So that's that. Okay, so now let me show you another double bottom that happened here along with this one. Okay, which is this right here. So the market came down, retraced up, came back down again. Again, they're buying off this critical support level right here, okay? So that is basically another double bottom. If we were to probably look at the daily, see, you had 1, 2, 3, 4 days where it bounced off there. But anyway, we're looking at the 4 hour. Come back. Oh, there you are. So anyway, there's a double bottom again, okay? So again, you would have drawn, let's remove that. Always got to draw a fresh one. You would have drawn a trend line like that. Now, if you wanted to get in early, okay, you'd have just waited for it to break in here. That's an aggressive entry, okay? Up it went about 70 pips, okay? Your stop would have been about, 65 pips. But if you wanted to wait for, here's some trade I have on here. Oh, selling 5 lots. Okay. Yeah, this is from my live account, this template, and I sold 5 lots that day and did a little scalp there. That's why you see that if I don't know if you can see my arrows or not, but there's little arrows there. See, there's the arrow to sell, and there was the exit. But anyway, okay. So anyway, back to this now. Right in here, if you waited, it's kind of risky to get in on it here if you waited for the candle to close. Okay, you're like almost at resistance again. So if you did get in on it, you would have suffered for a day or so. Okay, it would have went against you about 70 pips, but it never would have hit your stop. Okay, and it definitely went up, about 230 pips up to here. You would have made out like a bandit on that one. Okay, so anyway, that's basically it. You see, there's not a lot more. Once I've taught you the basic, part of it, what you need to look for and what you need to think about, in the trade when looking for trades, it's there's not much more to it, Here's one here up here. Okay, let's see how much higher this is to this high. See, it's 10 pips. Okay, 11 pips. That would classify basically as a double top. Okay, so let's see. Did it classify? Oh yeah, it doesn't want to stay there. Okay. Anyway, did it classify down here? Sure, it did. Right from here, right to there, or even there, wherever it went to. Okay. So anyway, if you got into this one, okay, you would have drawn a trend line, something like that, okay, and you would have got short right there. Your stop would have been about 60, 70 pips, 75 pips, and guess what? It only went down 50 pips. See, it didn't go very far. This is counter trend trading, ladies and gentlemen. Just like the easy to see divergence is counter trend as well. So anyway, that's basically it. Now let's see if you guys have any questions. And maybe go look at the 15 for a bit. Okay, let me go back here. Doug says the divergence continues right after that. Yes, Paresh, the bottom indicator is called the OSMA. You can download it in the members area. Cynthia, could you have taken that one as a low and a lower low? I don't know which one you're talking about now, Cynthia. So you're asking these questions when I had the window closed. You have that on mine too, Doug says. The obscene of divergence? What do you mean the obscene? It's double tops and double bottoms, Gerald. Cynthia says August 8th. Okay. Okay, that was what? A high and a higher high over here, you mean, Cynthia? Or a low, oh, did you say a low and a lower low? Let's see, Cynthia. Yeah, you could have taken it as a low and a lower low as well, Cynthia. Yeah, I see what you're saying now. Yeah, you could have drawn it like that. And then you could have drawn it from there to there. Yeah, it's a low and a lower low, and you would have got in. Same thing. You could have taken it as easy to see divergence or a double bottom divergence. Well, I've covered that before, but I'll show you. I'll tell you again, Victor. The aggressive entry right here, okay, is you would have had an order to get in right here at this price. Once it broke it, just a limit or a buy stop order, you would have been long from here, okay, and up it went. If you that's an aggressive entry, Victor, and a conservative more entry is you're waiting for the candle to close above and break the trend line. So you would have got in right here on this candle. Okay, so Gerald says there must be divergence in order to take a trade off double top or bottom. Yes, definitely. That's what we're looking for. Yeah. You're welcome, Victor. That's exactly what we're looking for, Gerald. You see, you could be trading you could have some moving averages on here and one cross the other, but is that going to give you a good confirmation? Probably not. So that's why these divergences, when they set up, they give us good confirmation, and the reason why is because they're always hunting people's stops, okay? So it didn't happen in this particular time, but here it did. There's people who went long in here, okay? They had their stop somewhere down here. Well, they came down right here, tagged their stops and said, thank you, and then they took it up. It's a dirty game, this game. Definitely is. Okay, so anyway, Philip says you don't mind leaving trades overnight. Yes, if you're going to trade 4-hour and daily, you definitely leave them overnight. If your temperament is, no, I can't do that, I can't sleep, well then you want to trade 15-minute charts, where you do the trade and you're out within usually a few hours. Yeah. What are you saying, Doug? Those sons, what? Oh, yeah, okay. Yeah, they come and get your stops, Doug. Yeah, okay. Laugh out loud. Okay, so let's go now, and we're going to take a quick look on the 15-minute, okay, to find a few double tops and bottoms. There's a couple of them. And then we're going to take a little break, and then we'll come back and we'll learn. What we're going to learn is the hard-to-see divergence. And last but not least, we're going to learn the fatal flaw. Okay, so let's go now to the 15-minute. I'm going to remove the screen here so I can't see your questions here right now, okay? Yes, Victor, longer trades involve more risk, definitely. Higher time frames involve more risk because, you're on a higher time frame. The stop's going to be bigger, okay? Okay, so let's go here. Templates, triple D white. Okay, there we go. Okay, 15-minute. Okay, here we are. Okay, so let's try and find and see if we had any double top. Okay, double bottom. Okay, right here, we did. Okay, look at this one right here. You don't even have to draw a line because 129 is where it bounced off of, right? Now, in a particular situation like this, you see how it's created this square box, okay? So, how do you draw a trend line like this? Well, you're not going to draw it like this, okay, like that, okay? You could draw it like that. That would be a major trend line, okay? But in this particular case, sometimes you're going to have to draw it where it needs to break through there, okay? So this would be your minor trend line, even though it's straight across. So it did break it right there, but not by much. And look, they took it right back down, scared everybody. Then they took it up. So then this candle right here was the one, okay, that you would have entered on. But anyway, here is our double bottom divergence. We got a double bottom basically right there, even though it's all these candles, okay. We got a low, but a lower high on the indicator. So you would have got long safely right here. You would have had 2 pips drawdown. Your stop would have been about 40 pips. And sure enough, it went up 40 pips. Okay. There's no double top up here. There is kind of a double bottom here. Okay. Right here. That's basically a double bottom too. Come on, cooperate. There, put it like that. Sometimes you got to disregard these wicks, okay, and just look at the price and go, okay, look, it made a low, and it came back down again, and it stopped basically the same spot. That's basically a double bottom, okay. Nothing's perfect in life. No trade the way it looks is going to be perfect. Nobody's perfect in this world. I'm not perfect. You're not perfect. Neither is this. So don't look at it like in a fine microscope where you're saying, oh, that's probably not it, But anyway, right there, it shows you your low and your higher low on the indicator. So you would have drawn a trend line, right there, right across there, like that. See, you can see the beautiful trend line that it's made. You would have took it to that point. There's a second point, third point, and took it right across. And now we're just waiting for it to break through here. See how, again, the trend line, let me remove this here. See how price came right up to the pip. It bounced right off the trend line here, came back down, almost took it underneath here again, but not quite. So then you would have got long right here, okay, once it shown this break of the trend line. Your stop would have been about 30 pips, okay. There's 25 pips, came back down. There, it went up, up, up. Gave you your 30 pips, okay. So there's your double bottom divergence. Now let me say this one more time to you. When the market's coming down and it puts in a low, then it retraces, then it puts in the same, pretty much close, not perfect, but close to the same low again, that's a double bottom. If the indicator shows a low but a higher low, that's your opportunity to look to buy. Just like it would be if it was a low and a lower low, okay, which is your easy to see divergence. So just remember that, ladies and gentlemen, when the price is going down, you're looking to buy it, you're looking for a low and a lower low, or you're looking for a double bottom to occur, and then you're looking to get in once it breaks the trend line, okay? So I know I keep saying that over and over to you guys, but believe me, this is what will make it stick in your mind so that you'll grasp this and learn how to trade it successfully, okay? So all the way up here, there was no double tops, okay? Even, you could kind of say this was a double top here, but, it's close enough. See, it's only 2.5 pips, okay? So say that's a double top there. It's the same thing as the high and the higher high, though, okay? So either one you could look at it as being easy to see or a double top, right? So anyway, you draw your line like that right here. Doody-doo, there you go. Oh, I think it's from over here, actually. Yes, it is. From there to there. But as you can see, that is divergent. Okay? You would have drawn your trend line just like I drew it before. You would have got short right here. And down it went. Okay? So, there's no double tops or double bottoms here. Okay? But there is over here. Okay? So on Friday, there was a double top. And it was like almost perfecto. Right there. And right there. You see that? Beautiful double top, double bottom, ladies and gentlemen. It was beautiful. So, you would have drawn, even if you took it from there, okay, it broke it right there. You would have got short right there. Your stop would have been 25 pips, okay. It gave you 15 pips, came back up, scared the living bejuju out of you, but didn't go past here, didn't hit your stop. Your stop would have been up there. Sure enough, it gave you your 25 pips eventually, but it would have took many hours, but you would have got it, okay? Okay. So anyway, that's it, ladies and gentlemen, on double top, double bottom divergence. Let's see if you have a few more questions. If not, then we're going to take a break and we'll start the next one. Let's see. Looks like a triple top. If it's a triple top or bottom, it is a higher probability trade. Yes, yes. The more times it goes up there, yes, and then breaks a trend line. Oh yeah, it just shows you that every time it kept going up, there were sellers there, sellers there, sellers there, and every time it was going down, there's buyers there. So yeah. So then when it turns around and breaks that trend line, oh, it's even more powerful. Yes, indeed. Okay. Milan says on 9/01/45. What? I don't know what you're talking about there. That both double top and double bottom. I don't know what you're talking about. On the 19th. Double bottom? Where's their double bottom? Hold on. There's no double bottom there, Milan. There's only a double top. Okay. Yeah, you don't understand the colors of the asma. Yes, yes, not yet. I didn't have time in this one to teach you, but in the next class, which will be in about 15 minutes, I'm going to teach you how my little twist to using the asma. Okay, date and time. Okay. Anyway, so we're going to take a little break now. Okay, about 10 minutes, and then we're going to come back and we're going to learn hard to see divergence and the fatal flaw, and we're also going to learn how to use the OSMA indicator in a different way, and also if I can spot one, what I like to call something that looks like divergence, but really it isn't divergence. Okay, but anyway, so we'll see you in about 10 minutes. Okay, and we'll get on to the next class. Thanks.